Well, good morning, everybody. Thank you all for joining us today. My name is Keith Crawford, and as Morgan said, I'm currently the treasurer for the Diocese of Louisiana. Um, Prior to that, I was treasurer of Trinity Church in New Orleans for 10 years and have just been around the accounting and financial management side of church operations in this area for a long time. And so I'm happy to speak with you all today. I'm gonna be sharing a PowerPoint presentation with you all. And so let's go ahead and start that now. Okay, hopefully you are all seeing this presentation. All right, so it looks by the look of most of you that it's probably a mix of lay leadership. I don't know if there are any clergy on board here, but this was really, as Morgan said, the origination of this talk started to new clergy, and what we want to provide here is a framework for accounting, oversight, and financial leadership of churches. Now that obviously looks very different when you compare a small church to a large church. And so there is going to be some general kind of overview things I'll talk about that may or may not be specific to your church, but this really is the goal here is to start a conversation and to set a framework on which we can build for the future. So I fully expect that over time we will build we will have additional talks where we actually might drill down more specifically into accounting terminology, or we might be speaking to very small churches that have a difficult time segregating responsibilities, or we might be talking to a large church that might have endowment management issues to deal with. But today's talk is really about overall financial and accounting responsibility and what we need to do just to ensure sustainability and common understanding. The joke I use all the time, nobody seems to laugh as much as I do about it, is that none of our clergy go to seminary to manage budgets and oversee accounting, but surprise, you got the job anyway. Our core objectives today, we want to understand the concepts that we're going to be dealing with. We want to be able to see how are we going to measure success financially and from an accounting perspective. What are some best practices that give us the best chance for long-term sustainability? And then this is where you all come in, assuming you're mostly lay leadership. The leadership of our churches that is in the private sector that does have exposure and understanding of accounting and financial terms are just really critically important to the success of our churches. Our clergy really do need our support in this area. And it's not because we're so smart and they're not, it's just that we're trained in these areas, and oftentimes their training and exposure and experience with these concepts is just not what ours is. If we think about what the roles and responsibilities are and how we kind of divide those out, we don't expect our clergy to be bookkeepers. They are responsible for ensuring that the bookkeeping is done properly, but it's more of the pastoral leadership, not necessarily the bookkeeping leadership. You do have to have financial literacy across all leadership, both clergy and lay. That part is really kind of the minimum cover charge that we all need to be able to demonstrate. And so if what we're talking about here really is are concepts that are not not familiar and are really not, if we're already kind of speaking over a level of experience you have, I would encourage you to, let us know what your clergy know, and um, that's going to be important feedback. If we do need to provide more of just a cursory baseline training, we can do that too. We would love if you all were senior partners in CPA firms. Very few of you, if any, are going to be able to demonstrate that experience. Money is a tricky topic, obviously, in a church setting. But we really do need to get comfortable with the idea that these monetary decisions are no different and are not separated from ministry decisions. They are one and the same. And because not many of us have deep experience with those kinds of conversations, it's often kind of a new language we have to learn. But it is critically important to the success of our ministry that we manage the money side as well. And that comes, the trust, the transparency and clarity for everyone involved. They really are leadership outcomes. So our leadership is how we are able to get to those levels of success that we want. We're going to now talk about the fundamentals of accounting. So what that financial literacy we talked about, how do we maybe think about, do I have that or do I not? You need to be familiar with three concepts: the income statement, the balance sheet, and a cash flow statement. That, again, the basic fundamental tools that we use in reporting to ensure that we are able to communicate transparently and also measure our financial sustainability and success. The first one, so the income statement, or sometimes you hear it called a statement of activities in a nonprofit. It is how we measure performance over time. So every month we come up with a statement of operating revenues and operating expenses. What's coming in, what's going out. Every month, it's a monthly period. It's then extrapolated out to a quarterly period, and then obviously at the end of the year we have an annual period. And it is the revenue flowing in and the revenue flowing out. We always want, as a goal, to shoot for a surplus. That doesn't mean we are booking large profits. Of course, even in our largest churches, there's never huge profits to deal with. That's not a management challenge any of us are going to have, but having a small surplus, at least breaking even, is critically important as a goal. And hopefully it's something that we can drive every year. I will say there is no church I've ever been associated with, or no church I've looked at, where that's been the case every year. Sometimes a small deficit is booked either for an unanticipated expense that they had to incur, or an unanticipated loss in revenue, or some other external kind of shock to the budget. But deficits on a regular basis signal risk, and that risk is not sustainable long term. Because we only measure this periodically, whether it's monthly, quarterly, annually, sometimes it feels like, well, we booked a deficit last year, but we just moved right into the next year and we kind of don't think about it anymore. That's not really a way that we can responsibly think about our financial outcomes. Every deficit has to land somewhere. Every surplus has to land somewhere, usually in the form of a slightly increased bank account. But deficits sometimes land in ways that we don't anticipate, meaning sometimes we have to take out a loan to cover a deficit. Sometimes we have to eat into our reserves or endowments. And while those might not seem like they've got consequences on that day, there are generally going to be consequences down the road. It's really important that we separate operating income from capital gifts or one-time gifts. So unfortunately, I've seen sometimes where a church will have a one-time revenue event. Maybe there was an ERC loan that got forgiven, or maybe there was, somebody passed away and left an amount to the church, or whatever the reason they sold an asset. Um, the one-time inflow of revenue is then sometimes used to cover operating deficits. So, well, we can't afford to pay our insurance, but we just got this one-time money, so we're just going to use that to pay the insurance this year. That may be the short-term way of solving it today, but long-term, it's not a healthy way of managing, and that's something that we would see on the income statement, because that one-time gift would be booked in a different way. Variance analysis is also really important. So when we get comfortable with the idea of the income statement, we will have a budgeted income statement. We will have, as the year goes on, a modified forecast of the income statement as things evolve through the year. And then, of course, we have the monthly actual results. And so it's important that we think about the variance analyses that we look at. So if we were projected to book $100 per month in revenue for a total budget revenue of $1,200 for the year, well, if we're running slightly below that, what is the reason for that? How can we modify operations or change our management approach to ensure we get back to the budgeted total? If it's a surplus, what's driving that? Where do we plan to manage those surplus dollars? So understanding the variance analysis, why things are different from our baseline budget, helps us to then it informs management decisions that will either get us back on track or help us manage unanticipated surpluses that we might have. This is a sample income statement. This is not real St. Matthews, by the way, if any of you are from St. Matthews. I chose the name St. Matthews because St. Matthews is, of course, St. Matthews, the patron saint of accountants. So that's why I chose that name. These are all made up numbers. The language you see on here and the structure you see on here, and the way that the columns add up, this is part of that financial literacy that we talked about. So these ought to be common terms that you all should be familiar with. The way that it's stacked and the way that these add up ought to seem logical. So we have revenue on top. In most cases, we'd like to have our pledge revenue being the majority of our revenue. So that's at the very top. Some of the more common other sources of revenue, contributions, grants, and then any other operating revenue that we might have, it's miscellaneous. For some of you, you've got a rental property that you might rent out. For some of you, it's a small operating business that is supportive of the church operations. There might be, whatever those sources are. The top section of an income statement always summarizes the revenue. For expenses, most churches have a similar expense base, and in most cases, staffing dominates the expense base. And so it's because those are decisions that are managed in a similar way, we group those related expenses together. So if you were to add a headcount, you would be adding not just the salary, but also insurance, payroll taxes, the workers' comp insurance we're required to pay, Obviously, if it's clergy, we make required pension payments. And so it's not simply just the base compensation that we would offer. Conversely, if we were to cut staffing, we would see reductions in most of these components. And so they're grouped together in that way. Other common expenses that we see churches having to consider and to manage: the assessment, the diocesan assessment, obviously, your facilities expenses, whatever those may be. Obviously, small churches, it's going to be lower. Larger churches, this can be a really important component. And with this is going to be the insurance expense that you all carry. The Diocese of Louisiana is an unusual one in that virtually all of our churches, whether small or large, are really struggling with their property and wind and named storm coverage and liability coverage. It's an expense component that's grown significantly as a percent of total expenses over the past 10 to 15 years. Fortunately, more recently, we have not had storms that drove those up any further than they have been, but it's going to be an expense component that all of us have to manage very closely. And then finally, most churches have program expenses that they would love for that one to be the largest expense component. Unfortunately, it often has to be deprioritized, but the fundamental view here that you should be familiar with as part of financial literacy is an understanding of revenue minus the understanding of expenses, which gives us an operating margin. That would be our surplus or our deficit that we would have for the full year. The balance sheet is our second document. It's our second tool that we use. So whereas the income statement gave us management information over a period of time, a month, a quarter, a full year, the balance sheet is our snapshot in time. And the way I kind of explain it to people is, if you think about your own household, you've got income flowing in and expenses flowing out. But if I asked you for your balance sheet today, it would be, what assets do you have minus the obligations that you owe? So assets, obviously cash, investments, property, and then the obligations, or what we call liabilities, those are the things that we owe, any unpaid bills that we have, loans that we are making, any longer term obligations that we will ultimately be responsible for. Those are our liabilities. And the balance sheet is literally assets minus liabilities equals our net assets. So that's our equity or our net worth. It's what we would have left over if we had to settle all accounts today. Now, why is that important? Because let's assume all of our churches are going to be going concerns forever. So why is it important to look at a snapshot today? Well, looking at a snapshot today is a measurement of risk or security. And we want to obviously mitigate and reduce risk where possible. So a church that's got a small list of assets and no liabilities would be a church that's probably got a relatively low risk profile. There's not a lot of surprises that they might have to manage. If something happened, they wouldn't have other complications to that. Whereas even a large church with a large endowment, if they also carry a lot of debt, they're at greater risk. They're less able to absorb a surprise or a downturn or some external unanticipated event, because those debt obligations don't go away, regardless of what that surprise was. When we look at those net assets at the end of the day, some of them are going to be, mostly, hopefully, they're going to be unrestricted. Some of them might be temporarily restricted, meaning they're intended for a certain event or instance. And then some of them are going to be permanent. So if I give to Trinity, but I only want my money used long-term for the altar guild or for our loaves and fishes program where we feed hungry people or whatever the program is, we will sometimes see assets that are donated or given with those restrictions. And it's important that we understand where those restrictions are. Again, I think about mitigating risk. If I do have assets that exceed liabilities, but all of those assets are permanently restricted, my risk profile is not as low as I think it is because I'm not able to use those funds to cover any shortfalls in the event of a surprise. Balance sheets are used to again give clergy and lay leadership an understanding of risk and flexibility. And your balance sheet strength equals the flexibility to continue your ministry and to continue the mission of your church, regardless of what happens. So that's why that document is important. This is a sample balance sheet, as we talked about. Assets at the top. For most of our churches, we're going to have some cash, hopefully some pledges, whether they're annual or capital campaign pledges or long-term legacy gifts somebody might have made as part of their will and estate. We often, we're not going to very often have inventory. None of us are in the business of selling things. But you might have investments. If you're a larger church, even a moderately sized church, you may have long-term gifts that have been given over time. You probably own some significant amount of property, the church itself, the property it sits on, probably buildings attached to it or as part of that campus. And so this is more, going to be a more common structure of what we see on the asset side of a church. On the liability side, the things that they would owe money for, oftentimes it's going to be just general operating bills that are not yet paid. Sometimes there's some due to obligations if there's if there is an amount of the diocesan assessment that's still owed, that would be listed here as an obligation. And then there's the debt section. So notes payable. If your church has a long-term mortgage on the church or maybe on a renovation that they did, if there was just an operating line of credit that was taken out, that debt would be listed in this section. So assets first, liabilities second, and then as we talked about, A minus B equals C. The net assets or the equity of the church is going to be what is left once you subtract those liabilities. Again, a larger section of net assets indicates, in general, greater health and less risk. Lower levels of net assets indicates higher risk, less flexibility, more concern about how we would manage through a surprise. One of the things we'll talk about a little later on is key performance indicators. Some of the ratios that we would look at and want to see for a church would be an operating debt to equity ratio. Obviously, we would want that to be as low as possible. We would not want that to exceed 10%. Now, if your church does, it's not something in the world. That may structurally be a decision or strategically be a decision that your team made for that. But in general, we'd like to see less debt relative to the net assets of the operation. If you do have debt, the ability to service that debt is important. And so the ability to have sufficient operating income from the from the income statement that enables you to service that debt. So what is that? What is that total amount that we need to pay versus the amount that we have left over in free cash flow? And you want that, obviously it has to be greater than 1-to-1, because if it was less than 1-to-1, you wouldn't be able to service the debt. Most banks would say that kind of a minimum safe level would be about 1.25-to-1. So they would want to see you earning $125 if you had to service $100 of debt. Less than that, things get pretty tight. And more than that, obviously you feel pretty good because you're generating enough surplus to maybe put some reserves away and absorb any surprises in the future. Cash flow, I'm not going to get into a cash flow statement per se, but just to know that the cash flow statement of a church can be drawn or created in any number of ways. It can be a small section below the income statement. It can be its own statement. If it's built on its own, it can be built in many different ways. But what you want to get out of this is that obviously goes without saying, cash flow is not the same as net income. Sometimes the net income of an income statement is not going to include all of the capital investments that you've made throughout the year as well. So you might have earned $100 of revenue, you might have booked $80 of expenses, and you have $20 left over as net income. That sounds pretty good. But if through the year you also had to service $30 of principal payments on loans, or $30 of a new AC system or some other repair to the church, obviously you've gone net, you have a cash flow deficit that looked like an income statement surplus. So just understanding the differences between those two are really important. Sometimes that's driven by timing. Sometimes we have pledges booked at one level but collected in a different level. Seasonality within our churches is obviously a big issue around cash flow. All of us, I bet, pay a lot more attention to cash flow in August than we do in January, right after our church service, our Christmas services. And what's the management take away from here? It's obviously that cash reserves are critical to preventing urgent decisions that may not be in the long-term best interest of the church. We don't want to make decisions in crisis because we don't have enough cash, because then you're left with sometimes more desperate options or options that you would otherwise prefer to avoid. This is where if you want to take away anything from this presentation, these are the concepts that I would encourage you all to get the most familiar with. All right, so this is how we're going to measure success. This is how we would recommend we all measure success within our churches. So as we talked about operating margin, we always want revenue to exceed expense. You want that to be positive. You want it to be consistent. You want it to be boring. Boring is great. If on a monthly basis, you constantly see a small surplus being generated, it means you and your clergy are managing the operation in a consistent, sustainable way. Obviously, deficits, especially frequent deficits, are much more alarming. Personnel measured as a percent of total revenue is an important metric. So again, if we plan to earn $100 this year top line revenue, but your staffing expense, you already know that that's going to cost $75, well, we already have an issue, because We haven't talked about insurance yet. We haven't talked about the programming expenses that we would love to spend more on. You want that staffing investment to be, no more than 60%, preferably closer to 45, because that then enables you to have flexibility in those other important components. Again, these are just things that if you're not within the ranges listed here, it's important to then start management conversations about what risk are we taking on by having it that high, and then what can we do to get that to a more manageable level. Facilities, again, these churches, we love our churches. They're incredibly expensive in some cases. Tracking utilities expense, maintenance, and then capital needs are really important. If we see that you're constantly having to invest any and all surplus just to keep the church in decent working order, then you've got a facility investment that is not sustainable long term. Oftentimes people ask me, what's a healthy cash reserve target to have? We would say between 3 and 6 months, 3 at a minimum. 6 months would be great. If I had to look at every single church in our diocese, my guess is very few of them have 6 months of cash on hand. But it's important that you do start, if you're not reaching that level, it's important that you start to have that be more of a priority within your operations. How do we begin to build a little bit of flexibility within the system? Again, to mitigate risk, to absorb surprises, and not have to make decisions in a crisis mode that you would otherwise not want to make. Pledge fulfillment, this one should be relatively easy. If we've done the hard work in stewardship and convinced members of our congregation to pledge, we should feel comfortable approaching them and conversing with them through the year to ensure that those pledges are fulfilled. And obviously, if your revenue is concentrated in just a few contributing members or high-level donors, that's a high risk that oftentimes we can't do much about. But understanding what that risk means, and if something were to happen with that individual, is really important. You want to be able to think about what would we do if this concentration all of a sudden wasn't there at some point. So these are key performance indicators. These are metrics that you should all be thinking about. I would encourage you to look at them regularly, to have as your whoever does your bookkeeping, as they are preparing the income statement and balance sheet, to prepare this as consistent ratios that you would look at, and just understand where you are. Again, if you're out of range on any of these, then to begin to have constructive conversations with those decision makers to think about how you might get back more into range. Oftentimes when I bring that up, people say, well, you're just trying to run this church like a business. And that really isn't the goal, obviously. The ratios that you look at over time, the single data point of any one day is less important than the trend over time. So that it's important to remember. Let's not go back and run these ratios and then go back and club our colleagues over the head with them to say, we're doing this badly. We have to change right away. No, it's more of an understanding of trend and why we are where we are, and if we're not happy within those ranges, to begin actions that get us into a better place. Looking at this compared to other time periods, prior years, as well as your budget. Obviously, that's where you want to be able to manage. You can make management decisions to either track to or deviate from. And understanding that context helps a lot with these KPIs. They're really the point of them is to understand the why and to ask better questions to inform better managerial decisions to ensure our sustainability. So again, they're not, I don't recommend that they be used as blunt instruments to start arguments, much more about helping you understand the context so that better managerial decisions can be made. We don't want to overreact with any one thing that we see at any one given point in time. We want to understand that this is part of a longer picture, it's part of a long journey, and these are tools that we use in our roles as people with responsibility around that management. You know, some of the core principles around financial sustainability, which I think, you know, must be the goal for all of our churches, regardless of size or composition of their congregation. Sustainability is important because it enables us to continue the mission. There is not one church that's going to be around long-term if they're not financially sustainable. Whatever that bare minimum is, however they want to define it, they will not be able to fulfill their mission as a church without a basic level of financial sustainability. And that's going to over time start to manifest in the form of a chronic deficit. If we start to see deficits month after month, quarter after quarter, it does tend to have a real effect on morale and on trust, and it does start to distract away from our mission as a church and our vision for what our congregation can be. And we want to avoid that. Financial sustainability that we just talked about enables us to avoid that, because that anxiety can really have a negative effect, not just on what we get out of church in our congregation, but the fact that we start to have to worry about existential issues. That sometimes forces people to pull back and wonder, well, I mean, do I want to be giving to an operation that I wonder is going to be around? These are all things that we want to avoid. Financial sustainability allows us to avoid that, and that stability is really, we're responsible for that. That stability is the pastoral care that we provide in our roles as lay leaders. So what are some of the best practices that are going to get us pointed in the right direction, giving us the best chance of having those ratios look the best, and to have a strong balance sheet and to have a strong income statement? Mission-aligned budgeting is near the top of my list. This is something we've actually been working on at the diocesan level. You've probably heard about the Diocesan Vitality Initiative. One of our core pillars that we've committed to working on over multiple years now is more of a mission-based and a mission-aligned budget. Morgan's played a great leadership role in that process over the past few years. And it really was about, we have a budget that sometimes is driven by its own momentum. We've invested in things over time. We have certain assets that we have, and the budget sometimes is just an outcome of the things that we've been continuing to work on for years and years and years. And what we really have tried to do is to go line by line and think about what are the things that we are prioritizing as a diocese, and are those things aligned to what we know to be the most important roles and responsibilities that we have? And we found that most of the time that was the case, but sometimes that was not the case. We had been continuing to invest in things because we had always invested in them, and they no longer mapped to our highest priorities. And so we've made decisions and we've changed some things within our own diocesan budget. I would encourage you all with your churches to do the same thing. Sometimes you've got a level of investment in something that's just it's there because it's always been there. Understanding if it still feeds and supports and expands your mission, critically important. Monthly review among clergy and lay leadership is critically important. Sometimes when we've been called in to help support churches that are in financial difficulty, I can tell you, in many cases, or in most cases, there tends to be a disconnect between what the clergy is seeing and what lay leadership is seeing and what the bookkeepers are doing. And you really don't want that. You really want to always be communicating in a constructive way, using transparent tools like we've just talked about, and ensuring that there's no breakdown among any of the key parties there. We always want to be thinking about a rolling forecast as opposed to a static budget. I'm not going to get into those today, but basically, we have our budget at the start of the year. We have the revenue details that make that up. We have the expense details that make that up. If we're tracking variance to those components, understanding how that affects a probable outcome at the end of the year means that we can manage it. If we just lock in a budget and we never revisit it, oftentimes by the end of the summer, early fall, or late fall, that budget's no longer relevant because things have changed. The world evolves, and we've had 8 or 9 or 10 months of revenue and expense, and things are just not always as we predict them. So understanding on a rolling basis what that forecast is certainly a best practice. Building those reserves like we talked about. I know it's difficult. It's really hard when you're struggling just to generate a break-even budget for the expenses that you have, to then have someone like me sitting on a Zoom call telling you, oh yeah, go build reserves. A lot easier said than done. But again, as leadership, it's our responsibility to find ways to do that, to find ways to mitigate that risk, and find ways to ensure long-term that we make the managerial decisions that make that possible. The same thing goes for capital maintenance, similar to reserves. You really need to be able to build a plan that ensures that our assets stay in good shape and that we don't wake up one day with a bunch of deferred maintenance. Sometimes we take on these roles and we step in day one and discover that list already exists. Well, again, how are we facilitating conversations with our colleagues to ensure that we start to build a plan that enables the capital assets, the church assets, to remain in good shape? That transparency among all the parties is critically important. You've got to have that transparency among all the stakeholders, clergy, lay leadership, and the congregation itself. So no surprises should be our goal there. Again, sometimes people feel like, well, these are confidential financial matters. My experience is that that there's always greater benefit and a higher quality conversation and a more constructive conversation when everyone knows the facts. And that transparency is really critical to ensuring that we get there. Hopefully you are all, at this point in my presentation, hopefully the terminology we've used makes sense and you're very familiar with it all. If you're a church that doesn't have a vestry or lay leadership that has that experience, it's really important to recruit people who do. It is absolutely a form of ministry. I feel like this is the way I best contribute to my diocese, and certainly the way I felt that I was contributing to my church. Um, I am not somebody who is going to visit the sick or the imprisoned, and I'm generally not the person making sandwiches for the hungry with my friends. But I do this, and I spend a lot of time and focus on it. It's my form of ministry. It should be something that you all feel is your form of ministry as well. Having that expertise um, really does strengthen governance. We cannot look to our clergy and expect them to carry that by themselves. So finding the people within our communities that do have that experience and reaching out and asking them directly. I will tell you, I had a conversation with a young man right before Christmas, and I have asked him to step up and play a role in lay leadership for the Solomon Center. And he agreed to do it. He was honored to be asked. He is somebody with a financial background. He's going to be a great addition to that committee. As I said before, this is not about running the church as a business. We want to frame this as stewardship. We want to frame this as ministry. And that's a critical part of the context that we have to keep in mind. And by having committees made up of people with that experience, and by structuring those in a formal way, we want charters, we want term limits, we want people to roll on and off. You want those roles and responsibilities, so that the structure is there, so that there's continuity over time, so that there's some institutional knowledge, and that puts us in a far better position to be successful. So with that, I hope this has been a little bit useful. I want to just make sure that we wrap this up with that context. Financial leadership is pastoral leadership, and we really must strive to build that clarity, which then builds trust, which then enables us to live out the mission of our churches. So I've got 9 minutes, Morgan. That timing worked out pretty good.
You did a great job, Keith. I didn't even have to come on and warn you. Nobody has entered a question in the chat. So let's, Keith, if you'll unshare your screen,
Oh, yeah.
so that we could all kind of see each other again, then I think, let's see. Let me see if I make sure I can see you. Okay. Is there any, since we have a tiny group, is there anyone that has a question for Keith? I know that was a lot of really good information that if you're like me, I'm going to need a minute to process it. But the good news is you know how to get in touch with me. And I can get in touch with Keith if there are follow-up questions.
I actually
So,
have a follow-up request of
oh,
anybody
great.
who watched this today. So we covered a lot in 50 minutes, 51
Mhm.
minutes. I would love your feedback, either to me or to Morgan in writing, that says, okay, well, this was great, this was clear, this was not clear, and this is an area you just touched on it. We probably need a lot more of a deeper dive within that. And so I would love to know where we should do a deeper dive. That's going to inform our future presentations that we prepare. Um, so that's a request I would make of each of you.
That would be great. And Ronnie just asked how soon the recording is going to be on the website. Ronnie, probably within the next week. We just need to get it to our communications director to pop up on the website. But we will actually put an announcement out to the diocese when it's available online, so that people will know.
I also think that it's likely that future presentations are going to be differentiated. Some, one that might be aimed at a small church would be very different from one aimed at a large church. I would love your feedback on, kind of where you see yourself in terms of that spectrum, where your church is, and what the highest priorities of things that you would want to talk about, so that we can help craft that.
Yeah, absolutely. And I think that, Keith has mentioned this. This is really just the beginning of a really long conversation we hope to keep having with you all. So, your feedback is really important. Just as a reminder, we are planning to meet again on February 9th to have another webinar. We've pinned that as one on maintaining financial stability. After you know all these good things, how can you work on maintaining that financial stability within your congregation? However, I'm sure if we get feedback that you would like this to go in a different direction, we might change the topic. But I just want you to go ahead and have on your calendar February 9th from 12 to 1. And then we will meet again on March 9th from 12 to 1. And at that point, we will be joined by our a partner organization, TENS, our stewardship uh, for the national church. So that March 9th will definitely be about stewardship. Um, but please mark those dates on your calendar. And after we get through with the first three, we'll probably announce the second series. So, thank you all again so much for joining us today. We're glad to have you all, and go in peace to love and serve the Lord.
Thanks be to God.
Bye, everybody.
Bye, everyone.